Honey, I blew up the business.
Welcome to the podcast. We have Mike Reid here today. Nice to see you, Mike.
Hello, Dan. Pleased to be here.
Wow, I'm really excited to have you here because I've had my eye on you for a while.
Oh.
He says, well, now, because Mike is the founder and senior partner of Frog Capital. And Frog Capital is a really interesting venture capital firm which is focused on European software scale-ups. And the reason I've had my eye on Mike, I was going to bubble it, is for full disclosure, we're working with one of Mike's operating partners with a startup that he's involved with. And I just really like Frog Capital, the business. And it's a great, very insightful, very kind of a lot of value being added to their investments and a lot of methodology, which I'm hopefully get into at some point. But Mike's founded the business, leads the business, and he's been an investor in venture capital and private equity since 1996. Woo!
Jeez, scary.
Bloody hell, you're really old now, aren't you? The other thing perhaps we'll get into today is they only focus on companies that have a clear net positive impact on society, which is something close to my heart. So we're going to get into all that. But before we do, a quick reminder that this podcast is brought to you by my company, the one that I blew up back in 2017, the tech department. So whilst I blew it up, I don't want to do that again. So I'm speaking to Mike so he can tell me how I can just keep doing it and not messing up like I did. But the whole point of this is to help you, by us having this conversation today, to manage your business, to lead your entrepreneurial journey without making too many catastrophic cock-ups. So if you like that mission, and we are on a mission, please share the podcast, introduce it to your pals, your peers, and give us a 5-star review on Apple, please, because that helps the algorithm. Good job Mike knows about technology, because he'll attest to that.
I will do.
Right. So we're going to get into. I want to get into. Right, so I've got something. It says on your LinkedIn that you've been working at Frog Capital since October 2008. So 2008, I was thinking October 2008. That reminds me of a certain period of time, which was because I got married in August 2008, and when we stopped spending money on the wedding, the economy crashed.
It's your fault.
It's my fault. Yeah. So So what drove you to launch a venture capital firm in the biggest economic crisis since the 30s?
Well, the one benefit of that period was we actually got into the FT. So for a growth capital firm raising funds to get into the FT, and I think we got about sort of 4.5 inches of coverage, which was impressive. But you're right, the global financial crisis was absolutely blowing a gale outside. Thankfully, there are people in the world who have been across multiple crises and can see the benefit of investing, particularly during and after a crisis, in terms of price points, etc. But it also, I think, did ingrain quite a lot of DNA into Frog about that particular time. So, for example, going through the recent tech crisis for this year, it's not really a new thing for us. Clearly, it's blowing a bit of a gale, but we've been there before. We've seen these sort of things before. So it's a healthy place to start.
Well, you say that now. I mean, because you were working in this sort of quite well-established private equity firm, 3i, I believe.
Yes.
So with the benefit of hindsight, you can kind of see all these things. But I'm always curious at these sort of inception points of the business. When you're in this sort of well-established firm, 3i, and perhaps you were there for a period, I think over a decade, I believe, and then you're setting up your new thing. And we can look back now with our hindsight and go, wow, it all kind of worked out, and I'm now experienced at crisis. But in that moment, was there a particular moment where you felt, have I made the right choice?
I think that was less of the issue, because I was in partnership with a quite significantly sized single family office. So in terms of the challenge was less of the kind of access to funding. It was more of, number one, there were just so many different things going on at that point. Actually, what should the strategy be? And I think that comes through sounds a bit sort of strategy speak, but ultimately looking back, it's just focus, so when you've got so many different opportunities where you think, wow, that's so cheap, or, this is a problem here, that we could do that kind of deal. It was a time where it was quite bewildering around what the focus should be. then ultimately the second piece in that sort of change, which is sort of similar to where you are now, it's impossible to gauge where you are in that downturn. People at that time were literally, shifting money into gold and buying lots of baked beans and all that kind of stuff. So I was having a conversation on one of the deals we did at the time where we had a long debate on whether we should do the deal. And of course, looking back, it looked just an insanely cheap deal. And, people say, oh, why didn't you do more in that deal? And of course, that just is missing the whole point. Because we didn't really know that maybe 3 months down around the corner, X was going to happen, and therefore it would have been the stupidest decision of all time. So it is just a really the learning point. I guess my point is in times of extreme change are points where it really tests if you don't have your focus, your strategy clear, and then what you're good at and what you're trying to do. It's very easy to just get off the page and start doing different things, or the opposite, which is totally freeze and do nothing, and 2 years later think, shit, I just missed the best investment opportunity period in my whole career.
This is actually counterintuitive, really, I suppose, for you with the funding. It's like a kind of where most people are perhaps getting impacted by that recession. You've got opportunities to invest and to do deals. So when you started the company, was it just you, or was it a team of people?
So the family office I mentioned had already started doing a few things, and that wasn't really working for them. And they had some, luckily for them, they had a couple of really good advisors. And it was those advisors who said, look, we need a different set of people, and we need a different, and so that's where I joined at that time to kind of take over and say, right, okay, what's my strategy? Back to that, what's more do I bring to the table? What have I learned at that whole 3I period? And what do I believe the long-term kind of, style of investing approach should be, and then start the building blocks to where we are today. So therefore, back to your point, I guess it was less around like a startup going around, right, I've got this sort of semblance of a business plan on a kitchen table, can I raise some money? It was actually more subtle than that. It was about, okay, we've got this guy in to run our money. Okay, let's step back and see whether this works out. So it was actually about having the ability to put together a plan, do some stuff, and do two things. One is both make some money reasonably quickly, so those people who have kind of backed you can say, oh, we got some cash back with oh, well, okay, that's pretty good. As well as not being too opportunistic to just do those and not have a longer term game plan.
Interesting. So you were kind of like opportunity emerged perhaps during the time, and you were in this role to kind of take that opportunity and take it forward. And I guess I'm always interested in the sort of bit where you've left one perhaps more established business to set this new thing up. Again, what was going through your mind at that time, just in terms of, you obviously you've learned all this stuff, but what was sort of, and there's a great opportunity and you've got all these pluses, but what was your kind of feeling going into that? Was there a feeling of kind of, I'm leaving the port to go out into the storm, to follow your analogy?
I think like a lot of people, they have a kind of zone of comfort because they've done whatever that thing is sort of so many times, and they've probably made so many mistakes in that area that they've learned most of the mistakes you can make. So that was, and we'll come on to some other stuff because I definitely hadn't learned all the mistakes. But there's a sort of zone of comfort, which ultimately was kind of, getting out about, finding investment opportunities, networking, and assessing those opportunities, coming to decision and executing. That was sort of a pretty sort of safe zone. The zone that was completely new, which was investor relations, if you want to call it that. So investor relations and then future fundraising, as we'll come on to, was nobody at 3i really had to do that unless you were in, the markets team or the fundraising team. But and so most of the industry I'm in either deploys money on the investment team, or all they do is fundraise, and they've never ever done an investment at all because they're fundraising specialists. It's only when you get into smaller funds where you're having to do both, do deals, find good companies, work with them, but also relate to people who manage money, who live on a slightly different stratosphere, with a different sort of typically global asset class kind of macro. They use a totally different language to the kind of so relating to those people, building credibility, understanding those people. Took me, and I'm still learning that. Took me, many years to sort of, to work out the hows of doing that.
So was there a particular moment then when you're in this, you started the journey, you're in the storm, it's all raging around you, and ironically there's all these opportunities, and so the strategic focus is really key. But you're in this sort of new job, being kind of, I guess, monitored by the people with the money, and you're making these early successes, trying to see the long-term thing. But you're in a different world though, and you're trying to learn this new language with these new people. Was there a particular moment where you realized you hadn't learned all the lessons? There was a whole bunch of them. And could you give us any examples where you were kind of really tested?
Losing money. So when you lose somebody's money, and it's a single family office, or it's your money, Dan, then reporting back on that is brutal. Because you know at a point where with all the will in the world, you haven't done anything deliberately wrong. You've picked a company, you worked hard to find that company, you've done all the due diligence you think was right, blah blah blah, but ultimately it didn't work out. And then you have to go and tell people that is extremely humbling, and more people should do it, because then it will make people more careful with the way they deploy money. So the learnings through that process, aside from just, when you got bad news, just fess up and be straight and be human about it. Actually, more so, I think, in in our case, years leading up to, because you never quite know what's going to happen. But obviously, in our world, you're typically investing for several years. Much more comfortable, I think, to a lot of people, is just, again, tell it straight. When things aren't going well, tell us it is. Don't try and sugarcoat it. And one of the big lessons I've learned is actually anybody, but particularly investors in funds and the like. If all they hear is good news, they don't believe you anyway. So actually, there must be some psychological reports on this, but if you hear some bad news, it frames the good news.
Yeah, that's a good one. I'm writing that down, actually. I'm going to seed a bit of that into things, a bit of believability, perhaps.
Well, I'll maybe divert a little bit, but it led me to really, in board packs of the companies I'm involved with, pretty well all of them have a CEO summary, which starts with, what's gone well in the last period and what are the issues and challenges of the last period. And such a simple thing absolutely frames a board meeting, or any meeting in that fact. It doesn't have to be a board meeting, because I've been into so many meetings. I'm sure lots of your listeners have been in meetings where you know there's an elephant in the room. You're not quite sure where it is, but the person speaking and leading the meeting is just in sell mode. And they just say, this is great, and we've made so much progress here, and we've added these and all this kind of stuff. And you're thinking, can't be right.
It's so funny. Actually, do you know what? God, I hesitate to even admit this. Like, we had a bit of that on the run up to our blow up. It was like too much kind of like chaff and redirect, like kind of good news. And I was in my gut, I was like, yeah, I don't know. I don't quite. But then if I'm being honest, I was a bit like, oh, well, you're managing it and I'll just leave you to it. I then repented at leisure kind of thing.
Yeah.
But I think it's interesting. It's an interesting point here about, working with people and the information you're getting and decoding that. One of the reasons I wanted to speak to you actually was because A, you're running a business, right? So there's had its own pressures, but then B, you're investing in other businesses who have their own sets of challenges, and you've just hit on them. And this is a podcast about failure and overcoming that, or learning from that, and growing from that.
Yeah.
And so you've got this more macro level view as well. But I'm curious to sort of see on this particular topic of communication and candor and kind of actually telling it as it is, and how you kind of suss that, because that was an issue for me actually. So you have this A, to yourself within your own business, and B, within investee companies or companies you're invested in. What kind of lessons have you learned in that particular respect?
The small things make a really big difference. I've given one example, but that kind of things are going well, issues, challenges we're addressing. These little, call them mini governance structures. That's a really boring term to refer to them that. But they start setting the tone for tabling the points you're trying to make. What else? I think in addition to that, I think there is what else? For us at Frog, we basically use our own operating partner who's ex-psychiatrist and a business psychologist. But that finding a people coach, particularly in key decision-making teams, so senior management team or even pair of founders, there is a whole psychology and studies around that kind of contending, confrontation, non-confrontation. So once you put your head into a bit of that, through that window of kind of, how do human beings relate to each other, it's all there, and it's not that complicated. And so actually having the tools as individuals, and also the other critical element which we work with our companies, but also ourselves on, is we all digest and process information differently. So if I have no appreciation of how you do that, then how am I ever going to understand what you're trying to do, or how are we both going to come to a sort of joint decision? So the combination of kind of understanding different languages and processes, so the brain pattern piece, and then having kind of some simple tools and techniques to signal to each other that that we are making headway in this conversation to a decision, or hey Dan, there's no data, there's no information, I need data. And you go, oh, I know Mike needs data, so let's finish the meeting. I'll be back to you tomorrow with the data, kind of. But these situations, but that piece is critical to start shifting the conversation onto from what sounds like you've experienced, but many companies get into, which is it's just too fast, too much positivity. Nobody wants to talk about anything negative or real. And yeah, we know kind of where that goes.
Well, yeah, I do. And it's really interesting. I think this whole thing is so funny, isn't it? Into the psychology of scaling your business or growing a business or sustaining a business over time, and which is an achievement in itself. It's like, I read, somebody said to me once, a business is limited by the psychology of the founder. And I remember it because at the time, the business wasn't going very well. And I thought, oh yeah, that's probably me then. And it was a bit of a rude awakening. And I think perhaps what you're saying, or one way I can interpret what you're saying is there's a job of work to do as a leader in a business, a founder of a business particularly, to understand your own psychology and other people's psychology around you. Because if you can't get that bit right, the interpersonal relationships and how you literally interpret each other's words and actions, then there's a lot of risk in there, basically.
There's a ton, and I guess two thoughts. One is, second one's coming back to my own experience, which I think is what you're after, and then I think certainly the scale up phase is such, which is one of the reasons we focus so religiously on it. Is it's a critical transition for us going from being a founder to be a CEO. I mean, to me, the sort of founder and CEO, it's sort of like, so what? You know, you're the CEO now. You'll always be the founder. You don't have to tell everybody because everybody knows. You know, the fact that you have to promote that you are the founder is kind of, well, why do you need to do that? Actually, what's more important is, do you understand what a CEO is? And can you step up to that new, very difficult level of basically ensuring you have a team? My journey, interestingly, was the opposite way around, because when I started Frog, my title was managing partner, because effectively I was CEO, for that period of time. And then like any scale up, the big challenge was finding, that beginning of a sort of senior partner group in any company, any team, that you can just think, shit, actually my partners are better than me in most things. You know, I might be better than them in one or two things, hopefully, but ultimately the combinations just starts. You just start to think, wow, we're working on a different level now. And in private equity land, venture capital land, funds work as a partnership, a bit like lawyers and maybe some architects, etc., and other kind of business models. And so actually the job after a period was finding a set of people who would enable me and were, probably not going to join the firm unless they were in a flat structure. So shifting to what my title today is senior partner amongst us, with Stephen Dunn and Jens Dewing, who are also senior partners, and we are equal partners in the business. So interesting transition, both trust for me with are these people working at that level that I'm big enough to say, right, I'm going to be at the same level as and bring them up to the same level as me, and then actually working genuinely like that, not like a kind of, well, I'm pretending I'm senior partner, but really I'll try and boss everybody around like I am. That I'm still.
That's a really interesting dynamic, actually. I mean, so how did you navigate that? I mean, that's quite. So in effect, you demoted yourself at a certain point, or kind of in some way you were this sort of like CEO.
Yeah.
And now you're more of a kind of collaborative partner, or you're in it together.
Yeah.
But that must be difficult. Talking about the psychology of the thing. I mean, one's ego, again, has, it's your baby. You got this thing, you built this thing, and suddenly you're letting other people into that. And so how did you navigate that?
So I actually think if you've got the right quality of people with ease, and I struggle a bit when I look at the scale-ups that are being successful. They really feel to me more like partnerships than really hierarchical. Yes, they have a CEO. Yes, their CEO has to do some things. But ultimately, when you look at the body language, the teamwork, the collaboration, the challenge, the ability to disagree with each other, I think the best teams feel more like partnerships. Because very rare that, and very, very, one of my colleagues has a sort of, he calls it the tall tree syndrome, where an organization is over-reliant on a single individual. And clearly that's the opposite of what I'm talking about, to say, right, actually, yeah, there's some very successful people with, an absolute standout boss who bosses everybody else around. And of course, culturally, when you peel back the onion layers of that, it's well, everybody's just waiting to get told what to do, which is why there's a tall tree, and if the tall tree falls over, the whole organization falls over. So back to your question, once, and that was a journey, the big part of the journey is finding people who, ultimately I could just trust implicitly, to be, in that partnership group. as I say, you'll always be founder of the firm. You don't have to keep barking on about it for the next 10 years, because otherwise you've got something that's not quite right in you that you feel like you need to keep reminding people who you are. What's more important is actually that teamwork and that team working, the ability to, right, hang on, Dan said this, and then I'm not going to let that go. I'm going to grab that and we're going to have it out. Oh, we've had it out. Brilliant. Okay, problem solved, onwards, rather than, many organizations can live with issues unaddressed, which become real problems culturally.
Very pragmatic and good. I want to come back to that theme of radical candor as a thing. I know you book you're a fan of, which I am a fan of. You said, I think on somewhere, we've made nearly all the mistakes in the Scale Up book. So as we're in a Honey, I Blew Up the Business podcast, what's your most instructive mistake that you've made in the Scale Up book?
Well, as an investor, the biggest mistakes you can make are just all around. Well, the mistake feels like it's a funding one. It's basically all about running out of cash. That horrendous feeling of, oh shit, the business is just at a state where it's just going to need more money, and it's probably going to need more money than everybody really wants to admit, et cetera, et cetera. So that back to radical candor then is a bit like slow motion movie. Because you move from the what's our cash runway? Oh, we've got till June next year. That's good. That's okay. So let's talk about the product now, or let's how are you getting on with XYZ? Boom! Suddenly you're in February. Hang on, how did that happen? We're in February. We've now got whatever, and we're not selling. So the mistakes are all around. Fronting up issues as early as possible. And that is not easy. Back to where we started from in terms of agenda management, really sort of somehow, and that's not just, for board meetings, but it could be, it's all, in every project or whatever, but ultimately fronting up with kind of what is on the critical path, what is going to knock us off, what's going to kill this project, what is going to cause the business to run out of money. Shouldn't we be talking about, those things right now? So the difficulty is it doesn't really feel like a mistake when you haven't done it at that meeting, but when you fast forward to February, it suddenly starts feeling like a mistake. And then the other mistakes linked to those mistakes, obviously, is okay. So what are you going to do? And of course, then there are some big decisions around, like many firms are at the moment, saying, okay, so should we cut the cost base? Should we make tough decisions? And of course, then typically the mistakes are, well, guess what? You didn't cut enough. You didn't realize how tough it was going to be. Lots of really awkward, tough decisions that you're just slightly dodging, maybe as a senior leadership team or even in your own business. So that's kind of ruthlessness probably is at the core of it. But I always, think I'm a big believer that ultimately the business is a personality. As a scale up, you go from founding a business and the founders are the business. And then when you're running 100 to 200 person company, the business is a thing. It's its own child. It's growing up to be an adolescent. It's moving into its 20s. So if you don't pare back and be ruthless enough, you're going to kill the business, or you're going to give it a chance to survive.
Yeah, it's interesting. There's a kind of recurring theme here of communication in the sense of like understanding what's really going on and embracing all sides of the sort of good and the bad, as it were.
Yeah.
Let's talk about radical candor now, because the other thing that springs to mind as you're talking is Reid Dalio's thing about embracing reality and dealing with it. He talks about in his book Principles, which I'm a big fan of that. And so this idea of like embracing the reality and seeing things clearly and then taking the sufficient action, because this is what you're talking about, not doing that. There's a very great risk, even though it might feel good in the moment, it's not quite as bad as it could be. All of the action doesn't feel as bad. But coming back, could you just explain to to the audience, what's radical candor, and how do you just explain the concept?
Well, I'm no expert on the kind of the detail of the book, etc. But for me, I think there's no point in radical candor for someone who's not open to listening to your radical candor. You just sound like a moaning whinge bag of lording it over to you. I've been through more crisis than you, and it's blah blah blah. So I think the key bit to radical candor and that ethos of feet on the ground, straight talking, is two-way. So absolutely, is whether it be in the role as an investor with a management team, or or project leader to the project delivery folks, etc. I think understanding the issues on their mind and their challenges, etc., is part of the two-way piece. And then starting to kind of just paint that picture of where the world is, using data where you can, and then ultimately painting some kind of paths to situations to help that person typically come out of head in the trees, and start stepping back and start seeing, okay, so if X, Y, Z happens, then ABC is going to happen. Shit, that's that. Okay. And so I think just thinking about that process of two-way communication, being a bit patient with it, but clearly firm, is important. Too many people just rock in, I think, with the kind of, okay, Dan, shit's hitting the fan. You're gonna have to cut costs, mate. Who are you gonna fire? Well, hang on. It's like I just had to catch up with my other investor who said, when are we expanding to the US? So it's a diplomatic game, but clearly there's that sort of firmness and clarity at the core of it.
And so as you say, we're in this sort of position at the moment where there's a correction or talks of recession or whatever it would be. There's a lot of kerfuffle in the tech industry this year. A lot of people getting laid off from all these big tech companies. So if an entrepreneur or a founder or a CEO is listening to this and they're confronting literally at the moment that situation, or they will in the future, so what are the things, are there any kind of key tips that you see time and again that someone in the hot seat is either does or doesn't do, that they're sort of going to make their experience of these crises more difficult?
Yeah, I think something that people in those situations don't do enough of, in my view, is actually just working out they know who their key stakeholders are. Let's say you've got your company, they've got, I don't know, four investors, you've maybe got a bank, you've got a chairperson, and then you've probably got a couple of really key people in the team you don't want to lose. So I think ultimately just spending really ideally face-to-face time, but time with them to really understand how they see the world, how their positions in the world. So each investor will have a different perception of what pressure they're under in the back, with how many companies they've got, et cetera, the chairperson, so everyone have. So spending time deliberately saying, hey, Dan, obviously we're entering a really tough, I just want to hear your views about the current market situation. I love a phrase which, again, not many people ask. It's like, if you were doing my job, what would you be doing now? Just tell me what you'd be doing if you were me right now. You talk to four investors, the chair, two of your trusted colleagues. Boom, you've probably got 80% of the answer in there.
Sometimes I think people are hesitant to give advice because they don't want to tread on your toes, even if they think it. And to this point about radical candor or asking for or being open to receive direct or constructive or even critical feedback, I think that's really healthy. And I think particularly, you mentioned it in passing, but the kind of, you get your head in the trees and you're looking at cash flow, or you're looking at an HR issue, or you've got something's gone wrong, or you've got some problems at home or something. You're getting that kind of external perspective and bouncing that back. And if someone doesn't have, so someone in a scale-up mode is a sort of perhaps a different setup, or someone with investors. But if you're perhaps further down the sort of food chain, you don't have a sort of chair and you don't have an investor to bounce that off. Well, have you got any kind of experience, and how do people where would you go to sort of to create that environment for yourself?
There'll be someone, who's naturally you trust with that. And even if it's your partner, my partner's an architect. She's a fantastic architect. She's not interested in my world at all. But when I lay out some things to her, she's like, "Oh, it seems pretty obvious that that's not a good thing, and shouldn't you be fessing up and dealing with that?" So I don't think the question is who. Because I think if people are scratching their heads to say, "Oh, I've got no one I can go and talk to," really, I think it's maybe underneath the surface. Are you struggling with just talking about it? Feels too scary, because then it's just going to be real. And then the second piece is, of course, well, you're the CEO. Aren't you meant to have all the answers? So if you don't have all the answers because you read all about these amazing people in the papers, well, then you can't be a CEO. Well, that's a load of bullshit, So cutting through both of those ego-driven things and just saying, right, okay, this is back to my sort of theme of partnership piece around this sort of hierarchy thing doesn't really help. It's like, well, if everybody's sort of partner-like, then I should just go and speak to one of my partners and just lay it out. And then particularly in the ones where people are part of the maybe they're a shareholder or they're something, whilst you'll just create a much more open relationship. If I come to you and say, look, okay, I've got my own ideas. I know I'm the CEO. I've got a draft plan, but I just want to spend half an hour hearing it from you and what you do. You're opening up a totally new dimension in the relationship. That will mature that relationship to the next level of trustworthiness or whatever you call that, will have huge benefits for you further down the line.
That's a real cultural play. It's something I've been bad at that actually in the past, sort of being a bit too probably tall tree, and I've been trying very much more to, again, like flatten the hierarchy, as it were. And that's less to do with org chart. And it's more to do with how you conduct yourself, present yourself moment to moment. Right. Yeah. So it's a kind of very long play. And it's actually, what's interesting about it, I like about today's chat is actually these are investments in the future for the crisis. Right.
Yeah.
So I often use self-deprecatory humor just to sort of, cause like I'll do that kind of thing, but it's almost just to flatten it down a little bit. So people who are within the business aren't quite as like, oh, he's the CEO guy and he's got the P45 machine, got to be nice to him. It's like, just flatten that down. And I see that as a way of, in the moment of crisis, you're going to get a straight answer, right? You're going to get given, actually, they're going to tell you what they actually think because they have that sense of safety that they can say it without judgment or criticism or undermining themselves.
Totally agree, and I'm just sticking with my theme of partnership piece, which is as I've seen the European kind of tech and scale-up landscape for over 20 years now. You to have this hierarchical CEO, it doesn't really make any sense if you think about it, because there's so many incredible senior leaders in finance, CFOs. Head of CRO, revenue leaders, customer success leaders, CTOs, obviously, CPOs, the product management area, I think is fascinating. Most of those individuals would never really want to be a CEO. They're all looking at the CEO job going, that is the last job I want. I want to be the product person. I want to be the tech person. That's my place. So it is a partnership, and there's kick-ass, C-level people who don't want to be CEO, but they don't see themselves as sort of reporting to and to be kind of told what to do by the CEO, because they're more experienced than you are. in their field. And so actually the collaboration, the flattening that you're talking about is in my view, absolutely vital. Not only for the success of the team, but actually for the mental health of you as a CEO.
Yeah, that's a really good shout, actually. And I think it's interesting because, one's ego says, yes, I'm the most important. You're the boss, you're the CEO, you're the rugged explorer at the front, conquering new lands and whatever, getting to the top of the mountain. And actually, what you're doing is piling on like pressure that ultimately is psychological pressure, which is mental health. And that then makes poorer decisions and poorer culture. And at a time of crisis, that's a brittle thing. And so I think that's kind of, that's a really great takeaway for everyone listening today. I think that sort of resilience piece, of the organizational resilience, comes from very, very small, often subtle interpersonal relationships that you have to be intentional about. Otherwise, you could really stitch yourself up.
Totally. And of course, from different angles, it's very obvious to the outside of where somebody is along that journey. And so a really simple indicator is, in scale up anyway, is who sends the board pack out. So to me, I really, really know when a leader of a firm has really kind of shifted into proper scale up when the CFO sends the board pack out. And that sometimes can happen really surprisingly early when you really get that kind of team trust relationship there. Or quite big businesses still, CEO, I'm the one who has to send it out. I need to check it over. Really? You really don't trust your team yet to be able to just send out yes, it's an important document, but it says a lot.
Yeah, that's a great shout. Yeah, when I stopped doing that, actually, one of my, senior leadership team sends it out, and it's far better. And I'm too much of a salesman. I'm like, this is brilliant. And Jeff, our non-exec director, but he was, I think he much more appreciates the less salesman CEO version. It's loads better, less hassle, and I don't have to do it, so it's loads better. And we're edging towards the end of our time together in the podcast. We've been dishing out words of wisdom all the way through. But what I like to ask people, in just maybe a minute or so, two, what advice should entrepreneurs ignore?
I mean, where entrepreneurs, I think, are exceptional and they should ignore is their vision for the product and the how the product's going to get used. That's typically where. So that's probably where they may need to and should be ignoring kind of the advice around, well, actually, it's not going to work like that, or, that's never going to work, or they're normally bang on around, right, they started the business for a reason. I mean, which crazy, insane person would start a whole company? They started up because they just knew from wherever they've been, this is the problem. It's not going to get solved by the industry today. That's probably the big area I would say they need to hold on to that the purest vision of that as they move forward.
Yeah, I love that. And I think it's easy to sort of water it down over time, particularly as the bumps in the road, to sort of the thing gets chipped away out of it. And, there's a certain kind of bloody mindedness to actually realize a vision.
Yeah. Yeah.
Well, a great conversation and with loads of great stuff. And I've been scribbling some notes here because I'm going to be taking this away and applying it to my company. And so if we want to find out more about you and more about Frog, where should we find you?
Yeah, well, you can find us obviously on we've put a lot of time into our website. It's easy to market value add in the investing business. So we genuinely believe we're doing that. And so we've actually shown a lot of our content on the website. And so toolkits around dealing with issues and problems of scale up right across the board. And then obviously on LinkedIn. So
well, check it out, and do check it out, actually. And the reason I know about his Radical Candor book was because Mike reads a lot and he publishes his reviews on his blog. And there's some really good, a couple of books, actually, that I do very like, and a few that I'm going to check out. So do check it out, and it's good stuff. And find him on LinkedIn. And I personally got a lot from that. So thank you so much, Mike. Thank you for being so open and sharing with us today. And thanks for joining us, everyone. Remember to recommend us, and I'll see you all next time. Do you want to get the top 5 tidbits from each episode email to your inbox every Friday? Yes, you do. It saves you having to go through and make notes and make a note of all the books and all the ideas that are in the podcast. We go through and we choose the top 5 we like, plus put all the links into that email. So if you just go up to honeyiblewupthebusiness.com, yes, that's honeyiblewupthebusiness.com, and just enter your email address. There's a little box, just enter it in, and we will send you that information. And it saves you having to make notes and all that. That's make your life a bit easier. And of course, if you did enjoy the episode, please consider subscribing. We are trying to help people through this. So the more people that subscribe, review, rate on Apple, Google Podcasts, Spotify, the more people will see it and the more we can help. So help us, help other people, other entrepreneurs like you. And before I go, I've got to say big up to my company, the tech department, the company we blew up and put back together again. They're generously supporting me on this mission through the podcast. So if you guys want to have a look at a company that can really help you improve your technology, make it better so your business gets better too, boosting your sales and your profit and a bit more sanity in your life, a little less stress, then head up to thetechdept.com, the tech department. My company, give us a look. On behalf of all of us here, thank you for listening. I'll see you next time.